What's up traders, welcome to Failure to Displace. In this video we are going to take a look at this morning's London session on EURUSD. We had red folder news on the pound which generated this pump. On the pullback we were able to find a setup for a nice 3R long position. We'll jump into the higher time frame analysis now and see what led to this potential entry. So as always, we'll start our analysis off on the 15-minute time frame. We're going to be looking at our untapped levels of session liquidity. So we're using the session liquidity tracker indicator. Links to all the indicators that I use down in the description box below. So if you'd like to set your charts up to look similar to mine, then you can find all the details down there. The session liquidity tracker is showing us untapped levels of liquidity with these extended green lines. When liquidity is taken, then we get a red line. So we can see essentially, we've put in a high on Tuesday. Today is Wednesday. Obviously, we've got red folder news today on the pound at 2 AM, but then also FOMC in the afternoon session. FOMC particularly can mess up price action, so we're going to be quite aggressive with take profits on this because prices can be rather erratic today. At 2 AM, which is now in our London session, we need to be aware of this. Although the news is on the pound, it can affect the euro. So I'm not going to be taking any trades until after 2 AM because I want to see how this reacts. So as far as our levels of liquidity go, we've got relative equal lows here. So the New York PM session just took the London low just by a point or two. It's created relative equal lows. So we've got sell side from the New York PM session along with potentially leftover trades from the London session yesterday. Asia has come up. It hasn't taken the New York PM session high. It started pulling away. So we've got quite a small Asia range at the moment. So we're looking for one side of the Asia range to get swept and then potentially look for a reversal to the other side of the Asia range. We have a 15-minute fair value gap here. It's to be mindful of. It looks like it's being respected at the moment. I'm going to mark out 2 AM because I'm not interested in taking any trades before 2. Essentially going into this, my bias is neutral. I'm just looking for a reaction as we sweep levels of liquidity after the news drop at 2 AM. Let's drop onto a lower time frame and start skipping forward. So our London session starts at 1 AM. This is when I start monitoring price. It's the open of a new 4-hour candle. So potentially we get an injection of volume. With us being inside the range, I'm not expecting much anyway. We seem to be consolidating. So as I mentioned, news is going to be the driver for this morning's session. So the 15-minute fair value gap's getting respected at the moment. Cleared through it. Back underneath it. And now we're just approaching the news candle. And that's why we don't trade the news. So the news candle, very aggressive candle. It's wicked down. It's taken the Asia session low. So we engineered some liquidity coming into the news. We've swept that liquidity. We've also swept these relative equal lows. So this sell side now is gone. We've immediately closed back inside the range. Now I don't like to take trades 15 minutes either side of the news. There's going to be nothing for me until at least 2:15. I'm going to close this 15-minute fair value gap because it's been traded through a few times now. The price aggressively moves up, so we're keeping our eyes out on the New York PM session high and the Asia high as well at the moment. So the news has driven price higher. We've taken Asia high. We've not quite taken the New York PM session high yet. I'm going to drop onto the 1 minute to monitor price action here for a potential reversal. We're into the 215, 219 at the moment. I would take a trade at this point if there is a decent reversal. We've still not taken that high. I wouldn't be interested in taking a trade at this point because we've not taken the high. We're too close to it. So I'd want a sweep of the PM session high before I started looking for any kind of short trades. Building liquidity here at the moment. You can see it engineering liquidity underneath this high. There we go. So we've finally taken the high. So our swing low, if we're looking for a 2022 model, is this low here. So that's going to be our break of structure. We've got a lower high to the left, lower high to the right. So that's our break of structure, and we've created a new high. We've also got this fair value gap. That gets traded through with a break of structure displacement. We could have an inversion fair value gap at this point. So that has been traded through. So potential inversion fair value gap here. There. So this fair value gap held a couple of times. It's now been traded through. Obviously, we've left a bearish fair value gap at the high here. This would be a breaker block if we trade through it. So at the moment, this is our last down closed candle. So this created a new swing low before creating the new high. This here would act as a breaker block if we trade through it. At the moment, it's acting as an order block. So we're really going to want to see that traded through as well. Like that. That's beautiful. So we've had displacement coming down. Now we've left fair value gaps, inversion fair value gap, created this. This is now a breaker block. Inside that breaker block, you have a bearish fair value gap. In fact, you've got two, more or less. This is the unicorn entry. So with this breaker structure and displacement lower, I would be happy to take a short trade here based on price coming back, tapping that. Stop loss just a couple of points above the high. I would take this. I would take 50% of the trade off at 1-to-1 to make myself risk free. And then I would run the rest expecting the low to get taken down here. With long wicks like this, so one thing I will explain. If I see long wicks like this, I treat these as fair value gaps. So this is an inefficiency in the market. So I like to monitor 50% of fair value gaps. The same will be said for wicks. So you'll have heard ICT mention about consequent encroachment of a wick. Consequent encroachment is the 50% area. So exactly the same as a large fair value gap. We want to see how price reacts at this point. So potentially I'll be looking at a take profit at this point if we get tagged in. Price aggressively moves away at this point. So we've not got tagged in yet. Left a fair value gap here. We've ran too far away now. We've taken, there's lots of low resistance liquidity here. So we've got one there, sell side. This is what you call a low resistance liquidity run. Taking sell side, taking sell side. Obviously we have sell side here as well. We want to see what happens at this point. If we pull back to that, I think I would be too nervous now to take an entry. We've taken too much liquidity. We're back down into a discount of this range. So there could be a reversal on the cards here. So more likely going to be looking for a long position. We've dropped into a discount, we've dropped into optimal trade entry as well, and we've taken several levels of liquidity. I wouldn't be comfortable just having a limit order waiting to get tagged in at this point. We'll need to keep that breaker block there, but we need to get rid of that. Time wise, 3 AM. So a nice rejection wick at 3 AM. So the open of a new hourly candle, this can bring in new volume. So we might get a reversal at this point, which is again, I'm not interested in having a limit order sat there at that breaker. So price does pull up, it's respected this fair value gap. So still bearish fair value gaps are being respected. Got to close through this bearish fair value gap. Created relative equal lows at this point. Taking that liquidity. So we're into this wick. So we're really looking at what consequent encroachment is going to be in this wick. How's price going to react? What time are we at? So we're at 3:14. So a new 15-minute candle again. So what we can see from this price action, again, building low resistance liquidity. We've got this. This isn't a trend line, but this is just showing price has come back with no significant pullback. We've got a swing high here, swing high here. So we do have targets to take profits if we do get a reversal at this point. So we're at 50%. We've left this big bearish fair value gap. Okay, so we've closed through that. So this could potentially be a inversion fair value gap now. If we can trade through that, then this would be a breaker block for an entry long. We don't. We've respected that fair value gap again, so let's get rid of that. So we've created a new high. We've tapped exactly the 50% of this wick now. So consequent encroachment has been tapped. Quite an aggressive move down. Our break of structure will be this candle high here if we are looking for a reversal at this point. Time wise, 16, 19. So really what would be nice is kind of something around 3:30. Left the fair value gap, relative equal high, so we've not quite broken structure. So we have got a break of structure here, and we've left a fair value gap. There were two fair value gaps, so on a high time frame that'd be a longer one. So we can see how 50% of this is going to get monitored. So what I've done there is I've just combined both of these fair value gaps. See how 50% is going to react. We've broken through this. So this essentially should have been an order block to pull price lower. We have broken through it. So this is potentially, if we start getting body closes here, going to act as a breaker block. Oh, so perfect respect of that 50%, 23 minutes past. So 50% of these fair value gaps has been respected perfectly. That's a good strong reaction. So we've broken out. So we haven't used this as an order block. So now what we've got is we've got another unicorn entry here. So that is a breaker. So this is the last up closed candle that created the new low. So it created a swing high, led to a new swing low. We do kind of have relative equal lows here, so that's not ideal. But we have respected 50% consequent encroachment of this wick. We are breaking away. Time wise 27. So again, we are coming close to that 3:30 window as well. Fair value gap inside a breaker block is the unicorn entry. So you expect this breaker block to hold. $28. So yeah, I would be happy to take a long position, expecting this breaker block to hold. We've had a breaker structure, we've left a breaker block, we've left a fair value gap, we've got low resistance liquidity here, so all this ramped volume dragging price back down again. We've more or less retraced the news driver in full, which is again something I like to see. To take the long, I would take 50% of the trade off at 1-to-1, so that would be essentially taking out that liquidity there. So these two levels of low resistance, I would go break even. Well, I would take 50% of the trade off, making myself risk free at this point, and then leave the rest to run, expecting to take out this high. So let's just see if we can get tapped in. So we do, bang, perfect. 29, lovely pin hammer rejection candle, and then hopefully the new 30-minute is going to open and drive us higher. So now we're into the new half-hour candle. Nice volume. Perfect. So we've hit TP1, we're risk-free, 50% of the trade is off. Then we're expecting all of this liquidity to now get taken, so session high is going to be the target. for a lovely 3.14. So price is just flying up. There's the breaker block, so there's the one thing that we maybe had concern over. Traded straight through it. We have that inversion fair value gap that we marked out, which has been respected. Into taking profits. There's no issues with a reversal here. We haven't had a break of structure. Kind of created relative equal highs actually, so we haven't taken take profit yet. Some buy side liquidity, so we just created relative equal highs here. There's a 1 minute fair value gap there. Oh. It's actually just been closed through. It's just teasing us at the top here. Has that done it? No, so that's not taken the high yet. Still not taking the high, so we're just engineering liquidity at the high here now. Very frustrating. It's not taken us out of the trade yet. We've just got 1, 2, 3, 4 touches at this high. Ramped volume here, so we need a push through. This is where trading can get very frustrating when you're so close to a take profit and it's teasing you. In lifetime, I'd have probably just crumbled by now and closed out, especially seeing this bearish fair value gap. And that's why I need to work on my patience, because straight away after that, we do get that drive through at new 15-minute candle. Look, there we go, 4:15. We finally come. So we have a little bit of consolidation for half an hour, 30 minutes at the top here before finally taking the high for a really nice 1.3R trade. Sorry, for a really nice 3.1R trade. So the basis for the trade is obviously red news folder pumped price up. We do expect red news folders to get retraced in full. I say it every time we have red news. We have come back looking at these long wicks, treat wicks the same as we treat fair value gaps. So specifically looking at 50% of the wick consequent encroachment, which we've shown respect of that 50% level. We've pulled up, we've broken structure, we've left a fair value gap as we've broken structure. Don't jump in at this point, I needed more confirmation, specifically looking for the new half-hour candle. We have a big large displacement candle here, so an engulfing candle. So there's one big engulfing candle here, another one here. Making this our breaker block, the last up closed candle before we create the new low. Price comes back, taps the top of the breaker block absolutely perfectly at 29 minutes past, which is just a textbook entry, new half-hour candle opening. Superb volume, zero drawdown, and then horrible consolidation at the top before taking the high. However, we do eventually get our 3.1R trade. So I hope you found the analysis useful. If you did, please leave a thumbs up on the video. If you have any questions, please leave them down in the comments section below. And likewise, if you're enjoying the content, please consider subscribing. The channel's been growing fantastic over the recent weeks. I'd love to have you guys on board if you want to see more videos like this. Thanks for watching, and I'll see you again in the next one.